So you want to buy a residential investment property, but you don't know exactly how the financing works for these types of properties. Well, I want to talk today about a DSCR loan, which might be the answer. And in 2025, they've gotten really popular with investors who are trying to build portfolios without all of the red tape. And so what do I mean by red tape? Well, let's break it down clearly so that you can understand. A DSCR loan is a loan where the qualifying factor isn't you. It's actually the property that you are looking to buy. We're looking at whether the rental income covers the mortgage, taxes, insurance, and the HOA, if there is one, of course. And that's really it. If the property cash flows in the game, essentially, and even if you don't have a W-2 job, or you don't have tax returns, or you don't have a 2-year work history, this is for you. And so even if you already own 5, 10, or 20 properties, none of that matters with a DSCR loan. And so the deal is that it has to make sense, of course. And if it does, well, the lenders are going to fund it. And here's how we determine if it makes sense. We use either the market rent from the appraisal, or if there's already a tenant in place, then we can use lease income. And so we divide that by the full monthly housing payment. And so that number is called the debt service coverage ratio. If it's a 1 or higher rate, some lenders even go as low as 0.75 to 0.8 if the deal is strong enough in other areas. Now, what are the 2025 basics that you need to know? So loan amounts go up to $2 million, and you can use them to buy or refinance investment properties. Again, there is no income no employment history that is required. Minimum down payment for these programs are anywhere from 15% down for purchases and 20 to 25% equity for refis, and as little as 3 months of reserves. Sometimes it even gets waived, and you can own as many properties as you want with this specific type of program. There's no cap like there is with conventional financing, and your credit score minimum is usually around 640, but of course, the higher the credit score, the better the pricing is. What I mean by pricing is the better that your terms will be, the better interest rate, better options for you that will be available. But even with average credit, this can work. You can use your DSCR loans for long-term rentals or short-term rentals. So think about Airbnb, VRBO, 1 to 4 unit properties, non-warrantable condos, which this is big for them. And if you are just getting started as a first-time investor, you can still qualify for this type of program. Of course, you might need a little bit more skin in the game. What I mean by that is you'll probably need to put 20 to 25% down, but there are lenders who will fund that first deal if the numbers make sense. And you can also hold title in an LLC or an S Corp, which makes this ideal for investors. Now, the reason why it's an ideal structure for long-term real estate investors is because the asset protection, right? They want to make sure that they have their assets protected and nobody can come after their assets and what they own. And it's also a very good tax strategy for them. And so the bottom line, if the deal cash flows, you have options. DSCR loans are designed to be simple, and they're for real estate people who want to move close, quick, and fast, and not have to justify every single line item on their tax return. So if you're watching this and you have a property in mind and you want to know if it qualifies, reach out. I can help you run numbers and structure it the right way. It doesn't matter what state you are in, I can help and guide you and make sure that the numbers make sense for you. So if you found this valuable, please subscribe if you want real estate content without no fluff and all that bullshit. Thank you so much.